Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade for March 15th, 2022. We are recording this at 4 p.m. Eastern Time, and this is episode number 190. My name is David Kosmeter. I'm the creator of Timing Research, and today we'll be discussing your trade ideas. So I gathered suggestions from the audience and put the list together, and I have arranged for Anka Metcalf to join us. And she's my partner on the Synergy Trader events that you might have seen. We did a huge one last week, the fourth annual Women Teach Trading and Investing event. And that went really well. And if you haven't seen that, be sure to check that out on TimingResearch.com. And the Option Professor of OptionProfessor.com is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. Welcome, everybody. Big snapback rally today. So it'll be interesting to see if we can look at some graphs to give us an idea of whether this may stick for a while or if this was just a liquidity issue going into options expiration later in the week. And the Fed meeting, of course, on Wednesday. So lots to learn here, but a big snapback rally today, that's for sure. Anka Metcalf is with us. And for people who are not familiar with Anka, could you a little background on yourself and what's going on at your company?
Hi, Jim. First of all, thank you so much for having me on the show. This is such a great show where we share, trading ideas, and we pretty much see where the market, we pretty much comment on the direction of the market, even in this crazy environment. So thanks so much for having me. So my name is Duncan Metcalf, CEO and founder of TradeOutloud.com. I've been trading professionally for over 19 years, have a little bit of investment banking background. And I'm the founder, like I said, of TradeOutloud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and actively invest in the markets. And Jim, back to you.
Sure. Okay. Well, we got a lot of stocks to cover. Plus, we'd like to get your ideas as well on a few things. But let's start out with the list. And the first one is in the energy sector, OIH. And again, oil clearly came off of that 135 number pretty hard. And does it look like this thing is just having a pause to refresh, or does it look like game, set, match?
That's the nice way to put it.
Right.
Well, I think that oil is still going to be levitating into the higher prices. And it is incredible that OIH has reached $300. I'm just going to put here the monthly chart to see when was the last time when we were trading into the $300 range. So it was back here in actually 2019. So it was at around $300. We did the swoosh lower into the pandemic, and then we started to actually move higher. I think this is a technical nod right here. Very, very technical. We came into the 50 simple moving average. A lot of investors are looking at this moving average, and for this time around, it's not as much as initiating new trades, but it was basically for taking profits from this really big rally that actually we had from $66 from the low to $300. I mean, this is massive. Plus, we also have a prior pivot low that is coinciding with that 50 simple moving average. Very technical. This is actually a low from 2019, and then we had another high here, which is pretty much at the same level with that 2019, and that was in 2020, beginning of 2020, January of 2020. So then we came here to this knot, and now this is going to be a big decision point. I was looking actually at a smaller time frame on a daily chart, and I saw that basically we came back in to test very close to the 20 simple moving average. Now, if we look at the technical chart, we can see that we have been riding the 20 simple moving average since the price finally got a little bit above this, popped actually a little bit above this 20 SMA here over the 200 SMA, and we started trending off of the 20. 20 is that really nice calibrating moving average. Bullish if the price is above the 20 is bullish, and trending above the 20 is bullish. If the price tags below it and stays below it, it might enter into a more correction phase. But the way I see it right now, this is an indecision bar. It is literally in between moving averages. So it's going to get the buying pressure from the 20. It's going to get the selling pressure from the 10. And I think that going into tomorrow, because this is a daily chart, if the price is going to manage to get over today's high, which is into the 268.78, so I would think about 270, taking into consideration the 10 EMA. I think that the price is ready to continue higher back into the 280. However, if the price is going to start trading and closing below tomorrow, so this is going to be the big line in the sand, tomorrow, below 257, I think that the price may be getting ready for a steeper correction on the daily, which would lead, looking at multi-time frame correlation, which will lead for a correction into the 250. I think this is, and also tomorrow we have oil inventory numbers at 10:30 that are going to weigh in on the on price action. And we have the FOMC, and we know that every time FOMC is on, we pretty much have a really wild reaction into oil, gold, into metals in general, and into indices.
Yeah, I mean, if he comes out with a dovish statement, it might be quite positive for oil or metals. If he comes in with a more hawkish statement, then that obviously could be more of a problem. This thing is a very difficult thing to work with because, again, you should have been into this stuff, obviously, in the 190, 210, 220 area. And then it had the spike up to 310. And now you're just trying to figure out, is this thing, just having a pullback and going right back up? And if that's the case, you're going to have another horrific situation in oil, aren't you?
Oh, yes, definitely.
Yeah. In other words, you're not going to take out 310 if you start hearing oil is going to be coming in from the UAE or something like that. You know what I mean?
Absolutely. Absolutely. So if we think that this is the high of oil, we could definitely go higher, go higher. Well, and let's not forget that we were trading in 2000, I think it was 2016 here, December 2016 into the 728.
Would you like I have a 12 SMA on my yearly chart coming in at around 269. Would you be more interested in seeing it close above 269 and then jumping back in after a little momentum rather than trying to catch a falling knife here, which could be dangerous?
Yeah, I definitely would like it over 270.
Yeah,
with a little bit of confirmation.
and then you could maybe make a case that 260 was the low, so you have a nice line in the sand underneath
Yes.
at 260, and you've got some momentum kicking back in. Those would be a little bit more comforting if you wanted to get bullish, right?
I agree, because if we manage to do like a little rotation here, so I'm trying to get this. So if tomorrow we're going to have sort of like kind of like this price action. So if we top out this high here, or open somewhere, and kind of like move a little bit higher. So this would be, this wants to be a candle. Then we would have a pivot here. Yeah. So then you will have that line in the sand, like you said, and we would have a support level that we can allocate a risk for the trade. And
out of all the charts in the universe of charts, this is not one of the easiest ones to trade, right?
No, and definitely none of the charts. I mean, if
in other words, it's like throwing a ball off the Empire State Building. Now you're going to try to figure out how many bounces it's going to have. It's kind of tough.
Oh my gosh, I totally agree. And not only that, but if you look at the indices are into such a turbulent environment. It's really hard to trade them and try to figure out, patterns in them, because they have been, literally back and forth, yo-yoing around support, bouncing a little bit. Today we had a little bit more bounce. So everything is up in the air. It's almost like you have to be in the market every single day. So if you're on the swing side, definitely take short-term swings. If you're on the investor side, just hang on, because you may have some really great trading opportunities coming up after this decline.
Well, let's talk about GLD. That also looked like the bloom came off the rose pretty well here too. So it's kind of in the same boat with oil. It went up on a parabolic move. It got thrown off the roof, and now we're trying to figure out where the bounces will stop. I saw Newmont went positive on the day and then closed lower, and that seems to be losing some air. So what do you think here?
All right. So GLD, I'm bullish long-term. So when I look at GLD, I think that most of the commodities, silver, gold, are really poised for a continuation higher. Yeah. They had a very quick reaction once the war began. And definitely this is a hedge for inflation, and a lot of, traders are seeing it as a hedge for that.
Mhm.
But the reality is that we have hit already target. We've hit target here into these highs. So 194 is the high that we had in August, I believe. Yeah, in August of 2020. And since then, we have been literally, been sideways all this time. And we had a high of 193.30 over here. So this is the same resistance area.
Yeah.
No matter how no matter how we look at it, this is still a very bullish chart. So even if we have a pullback back into the 160, I am still going to be bullish on GLD. This is for me a longer term trade. And I think that it has, great opportunity. If it should trade over 195 or at least over this high, this is going to really have a lot of traction. The weekly chart, again, just like oil, it had to snap up because they were moving in tandem. So gold and oil, definitely metals in general, along with commodities, they were just pushed to the upside. And now, of course, after you have such an exuberant move to the upside, you're getting a pullback. So you're getting some profits, you're taking some profits along the way. But I think the line of the sand is still going to be into the 176 area. We have another pivot high here, and we kind of stalled into this area of 178 to 179. So let's see what we do tomorrow. I don't think that, as a swing trader, if I'm putting my swing trading hat on, today would not be a good day to leg in. But as with oil, a lot of indecision going on here. So if we get the price above this 20 SMA over the 180, and of course we need to trade over today's candle high, I think that tomorrow we may have a little bit of a, let's call it short squeeze, quote unquote, not really a short squeeze, but we may have a little bit of progression to the upside into the prior low from Monday. And then we're going to reach resistance again. And again, it's going to be a day by day evolution. So what I'm doing in the market right now in my swing trades, if I see an opportunity, I get in, but I monitor it very close. I'm even getting ready to exit within the same day or the next day. So it's good. Everything is very short term right now until the market finds a direction. We have been trading into a lot of slop right now.
Yeah. Your two lines, the green at 175, 174, and the red at 170, I think those are just imperative to hold up if you want to remain long-term bullish. And so that's not that far away from where we are right now.
No, they're not. And I'm still bullish on it because if you look at the higher time frame, for example, on the monthly, that would coincide with the bottoms right here with this big support area. Yeah. And if you look at it, if I zoom in, it's just getting traction. So from the low, we have higher lows, succession of higher lows, and then this is the higher low right here. So I think that is just getting started. Let's add a little bit more time here and see if we can. Okay, let's give it a max available. All right, and let's take a look here. So I see we're already, so last year in August, we have tapped over this high here that was set in 2011. So we just made a peakable high. But now we revisited that. So it has a tendency. So every time it revisits a high, always kind of pulls back. This is very similar to what we had here, but the pattern is a little bit different because the way you look at it, this can be an inverse head and shoulder, where this could be the head right here. This could be the right shoulder. This could be the left shoulder. And this could be the neckline anywhere into the 185 to 190. So on a break of 190, this could go ballistically higher.
When you think about it, because you've been in this a long time, when interest rates are at 0 or 1 or 2% and inflation's at 10%, and it might even be higher, that relationship should make gold fly.
I know, but I think people are drawn not to paper, but to,
I'm saying gold should take off because of that relationship, because the last time that relationship occurred was in the early 80s, and gold went from $200 to $800. And so, there's a scary amount of potential to it. And then your lines in the sand at 170 and 175 can keep you sober. But, having optimism on it with this kind of, we're going to hike a quarter of a point. I mean, is that guy kidding? We are at 10% inflation basis the PPI.
What if we're going to have a surprise tomorrow? What if there's not going to be a rate hike?
Well, no, there'll
I
be a
mean-
rate hike. There'll be a rate hike. The question is he going to say next time we're going to go for a half? Because to be honest with you, the one guy was saying he wants to get to 1% by June, which would mean basically a quarter percent followed by a half and another quarter. And I don't think that's unrealistic. If these numbers don't break, if this fever doesn't break, and the PPI just came out today, and there's plenty of fever still there. You know, that's averaging out at 10% inflation. So, and that's wholesale prices, which means they're passing that along to the consumer.
Right.
So,
Right.
like I say, gold has a great backdrop here, unless there's going to be some kind of a quick flip into recession and a lot of deflation, which doesn't seem like it's on the horizon with all the money on corporate balance sheets and all the money in households. So, you know, it seems like you know, if the inflation is going to be persistent, which these people think, and the interest rates are going to be coming up at a quarter point every month or two, this could be a good environment for it, as long as it holds, like you were telling us, those levels.
I mean, yeah, Yellen just mentioned last week that the inflation may get very uncomfortable into the end of the year. She even said that, and I don't even know why she said it, but she said like no mention of recession. Like, why would she bring the word up?
Right.
Because you know how it is. Once the media picks it up, they're going to go like recession, recession, recession.
Yeah.
Recession is not bad for us traders. I mean, it's bad for the economy, bad for the majority of people out there. But for traders, it's actually a huge opportunity because you get to short on your way down, and you get to you actually get more shares of a company as you know at the bottom than you would buy at the very high. So, for example, if GLD is going to drop, let's say all the way to the bottom here into the 100, just think about it. You're going to get a lot more shares at $100 than at $200. So that is really great for traders, and that applies to stocks as well. You know, like you would rather get, like, would you rather get Apple at $150 or if it drops to $45 and load the boat at 45, right? But you need to have like price evidence in order to, you know, to get in. So you need to have a lot of patience before you do that. But I think that that's a great opportunity. But that was like, what? Why would she bring that up? You know?
Well, basically, you're saying if things do hit, it doesn't mean it's the end of the world. It means you should have some powder dry to take advantage of it. And if you have a trading account, you should be looking for signs where it's rolling over and try to benefit from the decline.
And by the way, you know, with recession, by the time, you know, they're saying that, yes, we are in a recession, we're already getting out of the recession because it's about those 3 GDP numbers that have to be negative or something like that.
Yeah.
Yeah. And then.
Well, it's kind of like people are now saying, I think we might get a pullback. We're already down 700 points off the high, you know? Anyway, let's go to the next suspect here on the lineup, and that's NVIDIA. Obviously a great company. It went to 340. All of a sudden the bottom falls out. You're down at 200. So, you know, if you had 1,000 shares of NVIDIA, you've gone from 340 grand to a couple hundred grand, and that can't feel too good. So right now it had a snapback of 16 today, but these snapbacks haven't exactly had great legs. What do you think about this one now?
I like it. I like NVIDIA. The fact that it has been holding the psychological level of $200, it's not by chance. I think that NVIDIA is really waiting to ramp up. These bottoming tails are a strong sign of price reversal. So I like it very much. I also like the weekly charts. The weekly charts are trying to hold the 50 simple moving average. You know how hedge funds love this 50 simple moving average, that they talk about this on CNBC day in, day out. You know, you go into the Twitter sphere, they talk about the 50 SMA. I've tapped down to the 50 SMA. Look at how many bottoms we have here. And these bottoms are setting, so this whole entire year, it has been holding above the 200. So into the 208 area, very interesting area that lines up perfectly with another pivot high. So we have additional minor support, defining that as area of support. And I think we just have to be very patient. Today was actually an amazing day for NVIDIA. It actually had a daily rotation. Oops. Here we go. Weekly. Where's my daily? I just messed it up right now. All right, here's the daily. So huge progress on the daily. Tap to support, another buy. Now we don't really know because we don't have that confirmation. The price is telling us that, hey, we're not into the clear right now. And we're still into massive resistance, because if you look to the left-hand side, we have a lot of resistance from last year. So therefore, you know, we also have this kind of flat 200 simple moving average here. It's rising a little bit, but it's flat as right now. You have the 20 SMA. We know that if the price trades below the 20 SMA, then you're getting that bearish influence, and algos are going to hit hard short into this area. So it all depends on how the news is going to come out. But I think NVIDIA has a really great potential here. The fact that it has been holding this long, I think it's a good sign.
Yeah.
The other thing that I like about NVIDIA, because I love to trade the weekly charts, and I really like it above $232.20. This is the high for last week.
That's a good number.
Squish. Yeah.
Yeah, I don't know. If it gets above there, then you're going to have some open field.
Yes, exactly.
But if you don't get above there and it starts rolling down, then you're back in the soup.
Then exactly. But this is going to give it a little bit of pressure. So I know, Jim, you're trading options. I'm not trading options that aggressively, and that much, not aggressively, but not that much. I tend to do the common. But if it trades above this high, so watch it this week over 232.20, it's going to have room, and you could have a quick target into the 240 area, 239 to 240 area to be safe. And then watch it, because if it trades above this point, then we can punch higher. So any close above this point at the end of the week, and I know it's kind of crazy because this is option expiration and anything can happen this week, because you know how they love to pinpoint these stocks and indices at certain prices. We don't know what those prices are. I wish we did, but we don't.
Yeah, the week after options expiration is generally when it hits the fan one way or the other. So I would be more concerned about next week's price action rather than this week's, because this week could be a red herring.
Yes, a yo-yo effect. But also, as we're getting closer to the end of the month, I love to focus on these types of stocks because these are going to be on my shopping list for potential window dressing.
Exactly. Because, if you're a portfolio manager, showing this up on your balance sheet, if it's coming off of the 220 is not going to make you look bad.
Exactly.
Putting Alibaba on there might not make you look very good, but
let's just put it for fun.
Right. All right, let's switch over to Ford has a better idea. Yeah, look at Alibaba. Ouch. Well, I mean, if you just went off the fundamentals of the company, they got tremendous growth. So obviously that is a fantastic story and would make it compelling to buy the thing. And then you put all the rest of it that comes with Alibaba, like the geopolitical and all the rest of it, and the regulatory and the shutdowns and everything else. And then you got a different story.
Exactly. Scary situation.
Yeah. All right. The Ford Motor Company was getting nailed, and then I think it's come off the mat a little bit here. A lot of these guys, though, are having trouble getting parts, and the cost of nickel and the cost of cobalt for these batteries and things like that they're doing supposedly is a problem, but it's cheaper than it was earlier. So what do you think?
I like Ford long term. I'm a little concerned as well with the supply chain, especially now that in China, they have 2 major cities under lockdown, and these were big on the supply chain for the US. So I'm a little bit concerned. I don't know what those cities were producing or what they were big in, but definitely, that can have an impact on, on what you just said. But from the technical standpoint, because there are 2 sides to the story right now, more than ever, because we have the war, we have lockdowns in China, we have FOMC meetings, we have all these other things. We still have, like, if you want to purchase a vehicle, if you go to the dealership, you guys know, like, there are no vehicles available. So all they do, they're taking orders. But from the technical standpoint, if we clear our minds and if we just look at the technical pattern, this is a really nice pattern for the pullback, because we had that beautiful exuberant move to the upside, and now we're pulling back into a minor support level. And this is a weekly chart, nice reaction off of the 50 simple moving average. Again, we are trying to hold the $16. $16 was also the breakout from this prior high. So this is very interesting for me, because this was last year. It was a nice push to the upside in 2020. And I think that it's come to this point where it wants to rotate. I'm a little concerned though, and I'm going to bring the monthly chart in. The monthly chart tells me a different story. And so we have so many elements that are a little contradicting. We have the news side, which is a little bit scary. Then we have the technical side on the weekly, which is very encouraging, that if we get let's say any kind of strategy that will line up with our location, we may have a buy. But then when we look at the monthly chart, we could definitely see that we have already triggered below last month. So we're trading right now below February. I was going to say Friday's low, below February's low.
Yeah.
So we are trading right now, but now we're trading into this chop. So Ford has a tendency, along with GM, they both have the tendency to pretty much stabilize at a number for a long period of time and coil around that number, and may have like pretty wide ranges of about $3 to $4 before they start going. But I think $16, if you're on the investing side, I think that this is a good skill and opportunity, just very small. For example, if you're using 5 lots or 6 lots, this would be like 1 or 2 lots right here, and then watch and see how it trades. And if it pulled back even more, then of course it's going to be a good trading opportunity. Think about if we're going to get another lockdown, right? I mean, I'm just putting it out there. All the news that is coming out right now with Pfizer that is seeking emergency approval for the second booster shot, with correlate that with what's happening right now in China. I mean, things are getting a little bit, and with the Ukrainian migration to all the neighboring countries and in Europe, and eventually they will come to the US. I mean, these are things that, probably the CDC is monitoring, and, they're kind of like, prepping for it. Is there going to be a 6th wave? I believe they were talking about. So I'm not very sure it's a 5th or 6th. I think 5th was Omicron. Yeah, 5th was Omicron, and 6th probably pending, God forbid. But anyway,
I got a question for you. Would you wait for it to close above 17 and then use the 16 low as a exit strategy?
I would.
Because then again, close above 17 gives you a little momentum, and then it would add some credence to the 16 as being a low point.
Yes, absolutely. I want to use the low. I would use the low here. So I would even go 15.30 or so, but contingent on breaking over 17. So
yeah, because I've got an SMA 36 month on my 5-year that comes in right around 17. And then on my 20-year graph, I have a 12 SMA that comes in at 16. So we're above the 16 barely, but if we got above 17, it would add credence to 16 holds. And then basically you'd have some momentum, and then you'd have something that might make some more sense, because right now everything is like spaghetti thrown off a table. You know what I mean?
I agree. I agree. It is. So it's going to get momentum, and it all depends again on this geopolitical context of whatever is going to happen. But it does have a little bit of momentum. 17 all the way to a very close to 1750 here, and this is going to be the next decision point. We escape the 17, then we're going to move a little bit higher. We have these prior lows from December of last year, and if we manage to break both those, then we have the next pit stop into the $19, 1950.
Yeah. And like I say, there is a liquidity situation. If the news got very good, I'm sure there's a lot of snapback to be done, because most of the longer term averages are way above the market in the, considerably higher levels. So there is that potential, but the history of the last 2 options expirations in January and February, they were followed by very healthy declines in the market. So next week, I think, is a real important week, because if you can avoid a decline next week in the market and you start getting above these numbers we're mentioning, you might have a nice rally on your hands.
I agree. I totally agree.
But it certainly could break either way still.
Absolutely. I mean, the monthly chart is the one that is a little concerning, because it's already into a downward traction. And it looks like if we press below 16, then we have plenty of room to 14. So it's really hard to go short or long this time. So you have to wait for that price evidence that Jim, you said.
Yeah, some kind of a feeling that you got some momentum behind you, and then it also would add more validity to the lower price,
Yes, absolutely. Absolutely.
The next one on the docket is Tesla, who also got thrown off the roof here at around 1250, went all the way down to 700 area. Now it's at 800, and kind of the same
Yeah.
story. Is it a dead cat bounce, or is there a low? Who knows, right?
Well, yeah, well, just like Ford, I kept it here on the monthly chart because it has an inside candle so far. So we still have a couple of weeks to go into the end of the month.
Mhm.
And that end of the month, I think it's going to be telling because if we go above the monthly high, so March high, I think we're going to start going higher. This is a nice pullback that we had into the 20 SMA. So first of all, in February, we tapped into the 20. Right now, we have a little bit of a higher low. So we're not trading below February, just like Ford is. So we're trading a little bit higher. So this is very encouraging for price action. Look at the chop and look at the slop. So obviously we were in a very painful pullback process. I see a lot of stop outs right here if you were trading it because it was very sloppy. And even the weekly right now, it doesn't have any kind of price evidence. It has a low. We have a huge bottoming tail right here that tested. Look at it. We have almost like a hammer candle, inverse hammer candle. Then we have this red candle. And now we opened a little bit lower this week, and now we're trying to push a little bit higher. I think that we have to take it day by day. So if I was, if I wouldn't trade Tesla, so I would not have it on my list until it improves. I would just stay away from it. For me, it doesn't represent like a good trading opportunity. I would like it if this week would trade above at least 866 or so.
Yeah,
So
at least 850.
Yeah, at least that. And then
because there's a lot of news in the EV. These batteries that they want to use are becoming extremely expensive to make.
Yeah.
And then the other batteries, they don't last very long. And then the price of the materials are becoming very significant. This guy wants to pick a fight with Putin in Red Square. I don't know what he's doing. Didn't he say he wanted to fight Putin or something like that? That's what I read. I don't know. Yeah, he wanted to have a fist fight. He was challenging him to a hand-to-hand combat. That would be, Don King should come out of his grave if he's not alive and promote the fight. You know what I mean?
Well, I don't know who's going to win here. I don't know the many talents of Elon Musk, but definitely, Putin has the black belt. So,
well, the next one up is just a sister of the GLD, and that's the mining shares. And again, on your long-term graphs, they are looking still like they've come out of their downtrend and are turning. And on the short run, they're having pullbacks like the other stuff. But where do you think?
This is a little bit weaker than GLD. GLD is a really nice representation of the futures contract of gold commodities. This one is the ETF, but it is not as strong as gold. It's kind of like missing, its relative strength, if you will. So
it had a much bigger move percentage wise. That's why I love Newmont mining and all this stuff, because on a percentage basis, 29 to 39, he didn't get that kind of move in gold.
Absolutely true. Absolutely true. So what I like about the pattern is that it tapped into support. It has huge support into the 35 to 36 area. We have these tops right here that
top's got to help you, right?
Yeah. Very nice, healthy support level right there. But then again, when you go on higher time frames, let me just shrink it a little bit. So, okay, here we go. All right. So we can see that, for example, GLD ran all the way into the highs. This one didn't run into the highs, tested the prior highs that we previously had last year, but then really didn't progress higher. Doji here. So we tested a little bit lower. It's all over the place. So I would, like I said, if you're a long-term trader, keep this one. It has a nice price point. It's not expensive. You can position size very nicely in this one. You can have a good amount of shares into it. I would not day trade. I would not swing trade it. I would keep it for a little bit longer. It has hefty, massive support right here into the 200 simple moving average at $28. It has been holding really, really nicely. And in fact, even higher time frames are progressing with a low higher low. I mean, look at this, $12 in 2016. And it came back to test $16, $17 here in 2020. This is a great opportunity. Look at the higher lows that we're having. So this is a really nice, beautiful support on the monthly. It's really, really nice. I mean, it's holding it's holding below $30. This is a good opportunity to hold over $40 could go to 45.
Yeah. Now we have a couple of things that are in the same business. I'm sure ConocoPhillips is in energy. It's going to look a lot like OIH, and we've got silver, which is going to look a lot like the gold. So why don't we move to something like MU, which is Micron Technology, I believe.
Yes.
And obviously that's the situation where it's very, very low. And if that was near a bottom, it's very away from its moving averages. So it's so extended, a snapback or a reversion to the mean here. If you look at a 1-year graph, aren't you showing your moving averages pretty much way above?
My moving. So
let me see. I got it. Maybe I had the wrong chart. I'll maybe double check. Yeah.
Okay. This is my monthly chart. I have nice support.
Yeah, Micron is way extended. Oh, you're looking at a monthly graph?
Yes.
Okay.
So yeah.
So that's a short-term graph then, a 1-month graph. Yeah.
Yeah. So I like the support here at 65. 65 is really nice support. It's deriving from a prior pivot high. It's repeated. It's patterned to the upside. So it had a buy set up off of this 20 SMA coinciding with this prior high. So if you look at this stock, it's literally, it has been trading textbook. Basically they have been, you know, throughout this month, they have been hit pretty severely. And we're back testing into the 65, 66, 60, not 65, but 60, let's say we can retest the 65, $66. What I did see is the daily, what I did see an opportunity today. I was doing a little bit of scanning. I was looking at SMH, was looking at Micron, AMD, and some other names. And I see that you have AMD on your list. And there could be like I said before, like that squeeze opportunity here, but that is short term. So nothing right now looks like, okay, this is an area where you can get in and stay in. We have some really ugly looking charts, messy looking charts where the trend is not yet proven to resume very time soon. So we need
if you were very aggressive though, Anka, if you were very aggressive, on my 20-year graph, I have a 24 SMA that comes in at about $71. And it closed above that, which I think is constructive. And
it's constructive.
If you were aggressive, would you, say if it broke 74, would you maybe take a shot and put a get out point around 71 or 70?
Actually, I saw it late today, but I would be in based on this rotation. So I saw it actually, like I said, towards the end of the day, it already ran higher. I didn't have an alert on it. But 72.50 would have been my entry. So 72.50 would have been my entry. There's still an opportunity tomorrow based on this continuation pattern. Of course, tomorrow carries a little bit higher risk than today because it's FOMC, but 73.50 is for tomorrow. So if it trades over 73.50, I would say 73.60, give it a little bit of room because it could gap up or, it could do some fleecing overnight. But over
if his statement is that we're doing a quarter of a point and we're going to be way patient and we're in no hurry we've got all the time in the world to raise these rates, even though inflation's at 10%, but I'm in no hurry. That's going to be music to MU's ears, isn't it?
Oh yeah, definitely. So all these semiconductor stocks and semiconductor stocks in general are going to react to it. So 75, it could run to 75, 75.50, and then all the way to this declining 10 EMA at least.
Yeah, because even on the 1-year graph, a lot of the moving averages are up in the 84, 86 area.
Oh, okay.
So, but that would be something would come out. Obviously, that would get the people concerned who are concerned about higher interest rates, aggressive Fed. And if they covered their positions, this thing obviously could have a big spring.
Oh, I agree. This could be like a really good trade. And like I said, what I'm doing in my trading is when I'm getting into some stocks right now, I'm getting in with small size. small size. And then as soon as I can bring my stop very close to break even. So I'm more of a scalp, like a quick, not a scalp mentality, but a quick swing mentality, like 1 to 2 days. And that's pretty much it. If I see the market conditions change, or if I see any kind of turbulence, I would be out. If I can bring my stop to break even very, very quickly and collect some profits into target one, for example, exit half at target one, break the stop up to break even. It's better to have one little skinny slice of the pie than no pie at all.
Yeah. And also, again, you don't want to go through your risk capital in an environment that's very difficult.
Yeah.
And when you get a chart that looks like this, I mean, obviously, the more reasonable trades were done in the 90s.
Oh, absolutely.
Now you're trying to guess, are we at the low? Are we at the low or here? And is it going to snap back or is it not? How much money do you want to throw at that?
I think this is a day trader's market.
Yeah, I would say so. Basically, you're dealing with a pit bull, and how much rope do you want to do? How much leash do you want to give to a pit bull?
Yeah, exactly. So here's the thing. I mean, you had some pretty good trading opportunities over this resistance today with a snap higher. Look at this base through lunch and then exploding a little bit higher. So it is a day trader's paradise. Today was a day trader's paradise.
Yeah, because you're getting enough volatility.
Yeah.
But you're also keeping things on short leashes. And in this environment, that sounds like a more appropriate thing than to buy and hold or something like that.
Absolutely. I mean, look at the nice moves that we have. This is a 2-minute chart. So you have nice continuation, stall, continuation higher, of course, lunchtime doldrums, but you still have a little bit of movement here. And NASDAQ had the same move. So NASDAQ went up in the morning, stabilized, popped a little higher into the close of the London session, and then it had a really wide range before it continued higher. But look at the activity right now. I mean, this is crazy, right? So at 4:30, after 4:30, huge spike up. Look at it now. So it still has, so tomorrow we may have a gap up.
Yeah, it could. It definitely got some legs. What about AMD? Same story, different chart?
Yeah, AMD. Oops.
Same spots, different tiger.
Yeah, exactly. But this one is a little bit better. This one is a little bit more constructive than AMD. I would say, because we're still holding the 100 level. Really nice. Above the 100 level. See how technical it is. We have a prior pivot high, very close to 100, very close to 100 right here. So we have 1, 2. So we have one bottom, second bottom, third. Let's call this fourth, fifth bottom right here. So we have pretty nice action. The reason why I'm saying that this is the bottom, because if we look on the daily, we do have a bottom here because it had already rotated. So we have nice bottom setting up into that. So if I was to choose between Micron and AMD, I would definitely choose AMD over Micron. So it has a much better chart pattern, much
I think
better.
they're in a much more profitable business too.
Yes. And plus the weekly, I like the weekly because it has these lows. Look at the nice support that we have here. And then this would be the cutoff line. So I would trade it definitely with a hard stop below $99 because this could be like an inverse. This could be like a head and shoulder pattern, the right shoulder, head, left shoulder, and this could be the support. So if it breaks that 99, it could still go lower, 90, $80, even $70. So it does have a lot of room, but then we could switch, then we could go short. But I'm looking at this weekly right here, weekly bar. And if the price this week is going to start trading 111.75, if we top out this high, then we can start moving higher, at least into the 10 EMA. See, everything is downtrend. It's not that it's down. It's hard to explain because they're downtrending, but they're into support. So that's why they're not going anywhere right now, because that support level is being defended because everybody's on a limbo. They're waiting on FOMC. They're waiting on a lot of things. They're waiting on supply chains. They're waiting on a lot of
EVs and semis have the same issue in that their raw material costs are either unavailable or at a high price right now. Unavailable and a high price doesn't sound like two good things. Why don't we get into the next one in the same kind of arena with Apple, AAPL, because Apple also has a situation with Foxconn where they have halted production of the iPhones. Is that going to be the straw that broke the camel's back here a little bit? Today it wasn't. Yesterday it was a little bit, but it held the 200-day, I guess, huh?
This is such a difficult market because on one side you have news trading and on the other side you have the algorithmic trading. 87% of the market volume. So you're having, yesterday it was a disaster. This is a daily chart. You know, like you said, news coming in, this is becoming weaker. You know, I was looking at it and I was, you know, and I was like, okay, if it breaks 150, we got to be careful. This could be a short here. But today it rotated. So it held that 150 rotation, the 200 simple moving average. And I'm going to show you something else that I saw today, because I'm looking at these stocks when I'm day trading futures all the time, because they're literally giving me the inside of what has the potential to move more into the trading day. So we're seeing that nice tap onto 50 SMA. Wow, this is not by surprise that we're getting the pop off of this level. High algo rich area, moving the price a little bit higher. You could see 155.60 tomorrow. I'm sorry, but yeah, this could definitely be over today's high, because today's high is 155.57. So if it trades tomorrow over this high, we're going to start moving higher, and this could be like a good opportunity to move into the 160. So it's a nice $4 to $5 into a profit target. And again, don't fall in love too much with it, because you have smaller target here into the 158. So it's a day by day evaluation. Again, reach target, take some off, move your stop to break even as soon as you're profitable, and then move your trails even a little bit higher. So you squeeze some of the profits out, because you don't know what the next day is going to bring.
Yeah. Keeping these things, you know, with some parameters, it's not a bad idea, because, you know, as you can see, prices go up and down in almost a spastic way right now. I tell you one thing, I'd like to know, I got a question for you. Are you ready to slam the table and say that the lows in PayPal are in PYPL?
Oh my God.
We want to put you on record and tape this thing. And, you know, now, because it's gone from over 300 down to 100. So 2/3 of the stock has gone out the window. This is obviously a payment processing company, among other things. So is it over here, or what's going on?
Okay, hold on. Let me just get my weekly, because this is
my kind of exciting.
Has been on my watch list.
Yeah, but again, fintech, which is kind of this thing's kind of in that deal too, has been getting nailed, and people have been buying puts on that ARC fintech fund, and so this thing has definitely been, you know, powered to the downside. But is it maybe time to take a look?
I love PayPal tomorrow over 101. With a target into 110 and 120, stop 91. I have the trade laid out in my trading plan. I'm have an order in, ready to go.
Yeah, because on the monthly, I got it, as long as it can stay above that 98, 99 area. Yeah, it looks like it might go. And as far as the longer term moving averages on it, you know, they're way up at 120 on one, and on the 5-year graph, it's up at 100. It's up at 180 and 200, and so oversold. This thing is the poster child of that as far as the technicals, huh? And it went into a price. I'm looking at a 5-year graph. It kind of went into a neighborhood that it hadn't been in since the crash of 2020.
Oh wow!
So it had a what do they call it, a 360 on it. You know, a total round trip. That's what they call it, round trip. Right. It started out about 80 or 100 after the crash, and then it ran all the way up to the 300 and change, and now it's had a round turn. Yeah,
we're back into where we were in 2020 at the lows of 20, close to the lows, not really on the lows of 2020, but April, the lows of April of 2020. Yeah. But I see an opportunity here on the weekly, so I'm glad you brought it up, because this is on my plan.
Somebody's got to be short this thing, right? So all we need to do is get a little Halloween mask and scare them out of their shorts, and you get probably a pretty good ride out of that, you know?
Exactly. I really like the way, and even the daily has been basing for a pretty long time. So end of February, we made a low, and then we rallied a little bit. Now, I don't know. I think this is very constructive, because we had the low here. We had another low, just barely below this low right here. And right now we had the doji yesterday, and now we're trying to pick up a little bit to pick up the pace a little bit. I think that over that 101 tomorrow, and if tomorrow we get like 103 or so, we could start a little bit of rally into 110, 120. Hey, who knows? Maybe we could get them into the 130.
Yeah, I
it's
mean,
gonna
if
be by
if it had
trailing.
any kind of a reason, it certainly has enough room above, huh?
Exactly, exactly. This stock was definitely hammered.
Well, this one looks like it's a brother or sister here. It's Twitter, TWTR. And again, it's also probably connected maybe to FinTech as well, or one of them is Square or something. Anyway,
Right.
it has the same scenario where it's very, very sold off. And now the
Mhm.
question is can it bounce? And this one doesn't look quite as good as the PayPal, I don't think, though.
No, I wouldn't put my money into Twitter. Like, I don't like the pattern. I don't think this is going to be a good technical trade.
Yeah.
Even
Well,
though it's trading, yeah, even though it's trading into this into these 30s, it's, you know, it's kind of like holding the 30s. I'm not a believer into buying this. But Facebook is the same, right?
what about, I'm going to throw a couple here before you get into yours. How about some industrial metals, X or Cleveland Cliffs, CLF? A lot of people tout it as these are going to be great companies here. And they obviously have had a nice pop, but what do you think?
I love these stocks. I have been trading X and I'm out of it, so I'm not in anymore, but it has a great technical pattern. It is a must watch. It has a lot of potential for this year, especially that the monthly has just broken out and it is just ripping higher. So I think that any kind of pullback in this stock is buyable. Of course, it's going through the regular hiccups with whatever's happening in the market.
Right.
Monthly chart, we have a flat 200 simple moving average at $40. If this year or anytime soon, maybe throughout this year, if we manage to get into the $40, this could lead to a massive short squeeze higher because we have been basing since 09. So this is going to be a major short squeeze higher. That's my take on it.
And what about on the natural resource called natural gas, RRC? Some people are thinking next winter we're going to have the same kind of problems, and this thing could have a lot of potential. Any reason to think that's true?
Higher, yeah, higher gas prices, that's for sure, I
Yeah.
think. And
It's hugging that
yeah,
nice red line pretty good around 20, huh?
I do like it. I like it. I like the fact that it has been trending for a while. So it has been trading since for a year now.
Yeah.
Since it, look at the bottom. Wow. I wish I would have see, I've never traded this. I have to admit, I've never traded RRC. If I had seen this, we're actually going to put it on my list. Okay. So if I had seen this at $1, I mean, I would have been all over it right here. So yeah, are you kidding me? Like $1?
Yeah. No, that's not a bad one.
You can't go wrong.
Whatever
what's your
they're
risk
doing,
on this? $1?
Yeah, it's been working out. All right, before we run out of time, hit us with a few of your own, and then we'll wrap it up so that people can get a hold of you.
Okay, so what I'm looking at is basically momentum type of stocks. I'm going to give you right now. So yesterday I got into VIX. Have you seen what happened to VIX today? It was halted 4 times.
Oh, well, I didn't notice that, but I noticed the VIX was falling from about 34 down to 29.
I know, it was crazy. So I picked it up at $29 yesterday and I was like, okay, so I picked it up from this hourly breakout and I'm like, you know what? I better get a little bit because what if going into FOMC, we're going to get a market crash? I'm just going to get some, you know?
Yeah.
And I'm going to position size it with a stop into the $24 and I'm just going to see what happens. I had targets into 34 and 36 and today it went to 41 and I actually closed my position at $40 today.
Perfect. Great,
it was
great,
just
great.
like, are you kidding me? Because I
bravo.
I mean, this was crazy and it was halted 4 times. I hate, you know, a long time ago when I was day trading stocks, I was getting in some pretty crazy stocks. And oftentimes, you know, they would halt. And I never liked the feeling because the volatility that comes after that is just crazy. And you're going to end up losing money in the end. I mean, literally, because it happens so fast, you really don't have time to flatten your position. But the bottom line is that what the heck happened because the market was holding, it was going higher and the VIX was going higher as well. It was just insane. Yeah. So other than that, I'm still looking at, for example, at Microsoft. These are, you know, some of the stocks that I have. I still see it relatively, it is stronger on higher time frames. So for example, if you look at a monthly chart, still very strong. These will have and may have a really strong potential for a rotation higher if everything is going to be if the market is going to interpret everything as positive into the FOMC. These stocks may have that relief rally going into the quadruple witching option expiration, because these are very good companies. Today I was looking, and first of all, yesterday I had a short. Okay. So I had a short yesterday from 279 to 275. So it went into the 275. What was the low? 275. It went to a low 275.82. Pre-market, it went and hit our target actually. So if you look at the pre-market, it went to 274.64. So we hit our target and then we started to move higher into it. These are very interesting to the short side and to the long side as well for me. So I'm stocking both opportunities. Definitely, I like the idea of the long more. But I think that with any other stock, I mean, look at the downtrend. There's a downtrend and then there's the downtrend. I mean, what is this? This is like hiccups up, hiccups to the downside. Whoa, a bar up, sideways. Oh, we're back down again. And we made, probably made a new low here. Yeah, we did. But these are stocks that, have a really strong potential of continuation higher. Also watch Pfizer, Moderna. These are stocks that may continue higher. I've had this for a while. I caught this move. Actually, I have targets into $54 for it.
Looks like these people are starting to hedge against another variant, huh?
Yes, exactly.
I don't think I like these stocks going up. I just had a COVID test because I'm going on a trip, and whenever you get one, you have to wait till it comes out. And I'm saying I have to cancel my entire Jamaican trip if this thing comes out positive. I said, so I got a negative, thank God. But I mean, talk about nerve wracking, waiting for that, knowing you're never probably going to get your money back from all the hotels you prepaid for,
No, exactly. And it's really scary because there are a lot of false positive. I had COVID and I had 3 tests that were showing me negative.
Oh, God. Yeah.
Yeah, seriously.
God bless Abbott Labs, right? God bless Abbott
I'm
Labs.
telling you, yes. So when I first had the worst symptoms, I tested negative. And then 3 days later, I was still negative. 5 days later, I was still negative. After 7 days, when I was like feeling totally better, like literally better, guess what? I was negative. I was positive.
Well, you're in Florida. You should have went over to Mar-a-Lago, got some of that bleach you're supposed to drink.
Definitely.
All right, listen. Let's
I'm
get
in
in.
Detroit
We're at the top,
right now. Yeah,
we're
I'm
at
in
the top
Detroit.
of the hour here. So let's just recap how people can get a hold of you. And of course, you've got a fantastic trading room that you work with every day. So explain all that and make sure people can get a hold of you.
Okay. Thank you. So if you guys want to get a hold of me, you can find us at TradeOutloud.com. I run 2 services. One, I have a futures trading room where I literally hold your hand through the trades. You can take my entries, my stops. So I trade out loud. All my trades, you're going to hear them out loud. You can copycat them. All you have to do is position size, and pretty much that's all you have to do. So I give you the entry, the stop, the target, and the trailing. So that's very important. How you exit the trade, because here's the thing: you can get into a trade, but the problem is, how are you going to manage it? Are you going to take profits at target 1? What are you going to do? Are you going to take yourself out? So I manage it for you, so you get the max juice from that trade. And until you get the hang of things, so you get up to learn a lot from the trading room. I also have another service, which is the stock swing trader, where again, I present you the trade setups for the week and give you the market commentary. I update you. We have a private feed where I update you on the market situation. And if there are any additional trades that are lining up during the week, just like the PayPal one that I just showed you earlier. So if you guys want to email us, info@tradeoutloud.com, or visit our website for more details on the programs that you want to select.
Perfect. Okay, great. And as far as Option Professor is concerned, I put together a couple of PDF reports. One's on hedging downside risk, but also upside surprises, which could obviously be a factor. So we have a PDF report on that. And then we have our best stocks that we believe in each specific sector: energy, metals, biotech, cloud computing, the whole 9 yards. So optionprofessor.com, go to the website, put your information in, and we'll explain how to get it. So that's what we got. And again, thanks, Anka, for being here. We're going to do this again. I know we will.
Oh, I can't wait.
Yeah, exactly. And I think, to be honest, between the Fed options expiration and then the week that follows next week, I think lots of opportunity up and down. And again, people should check into what you're doing with the shorter term trading.
Oh, absolutely. Thank you so much for having me on this show. And I wish everybody in here to have a nice, profitable trading week ahead.
Okay, thanks, Anka. And David, I'm going to send it back to you now.
Thank you.
All right. Yeah, great episode. That went by really fast. I was sitting here listening and then realized all of a sudden we're 50 minutes in. So
I know.
So, that's good.
Yeah,
we
great.
Just get along.
We're
That's
having
fine.
too much fun.
Exactly.
Yeah. All right. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app so you can get instant updates to new shows and events. Also, you can just go to TimingResearch.com to get access. This episode will be there as soon as I can get it posted. Also, any of the past shows and events are there, including the big event we did last week. And there's 27 presentations, educational presentations from last week that you can review at any time. So be sure to check that out. And I just want to thank my guests again for today. Anka Metcalf of TradeOutLoud.com and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.